Guys, welcome back to Product Mindset. Today we're diving into one of the most urgent challenges facing fintech builders, how to design infrastructure that's both compliant and innovative. Fintech has entered a new era where compliance isn't just a regulatory checkbox, it's a competitive advantage. From AML and KYC to global data residency rules, the way we embed compliance into infrastructure will define the future of trust, resilience, and user experience in financial technology. To help us explore this, I'm joined by Oleksandr Potapenko, co-founder and CEO at FinRay Tech. He brings deep expertise at the intersection of financial technology, product infrastructure, and regulatory strategy. Together, we'll unpack how product leaders can transform regulation from a burden into a driver of innovation. Oleksandr, please introduce yourself and tell us more about your experience.
Hi everyone, and many thanks for introduction and invitation. I'm Oleksandr Potapenko, founder and CEO at FinRay Tech. As you know, we built a compliance-first core banking system with integrated AI functionality and AI governance and security layer. We use OCR and AI to read invoices and statements, check and deduplicate them, run pre-flight checks and auto-prepare, and reconcile bulk payment orders. Our approach could help to cut manual work, errors, and cycle time, so pay runs are faster and cleaner. Behind the scenes, we run rules as code with strict governance and tool controls, full end-to-end audit, strong data protection, and a developer copilot. It makes us regulator-ready, shortens audits, lowers remediation risk, and lets you expand safely. Let's explore how to build FinTech that is both safe and fast, and turn regulation into an advantage.
Thank you. My first question then, how do you design product infrastructure that makes compliance a native part of the experience, scalable and auditable, without slowing down innovation cycles or sacrificing usability?
As you know, the modern approach is to treat compliance as code. At FinRay, we took this philosophy to its core and put the rules inside the product, not in a binder on a shelf. Every requirement, like anti-money laundering, know your customer, and business checks, sanctions, and where data is allowed to live, is written as clear rules with tests. The platform reads this rulebook at each step: onboarding, starting a payment, screening it, posting it, and paying out. Our core system, Core Bank, keeps a flight recorder of every decision, which rule triggered, what evidence we used, and any human override with a reason. When a regulation changes, we let our AI draft updated checks from the new text. A human reviews them, and we run them in shadow next to real traffic. And only when the results look right do we switch them on. For regulated fintech, this feels simple. We pre-fill company details from official sources, ask only for what is missing, show a clear path, or fail before money moves, and keep a full and reliable audit trail.
We all can see that global expansion introduces challenges in infrastructure, cloud versus on-prem, API reliability, multi-jurisdiction data storage, and third-party integrations. And these choices impact both compliance and customer trust. What infrastructure strategies help fintech companies ensure regulatory compliance while maintaining high availability and security? And how do you balance speed to market with building long-term resilience and trust in your systems?
To be honest, real systems fail. Providers stall, network blink, and cutoffs arrive. It all boils down to a simple principle: expect failure and plan for it. We design so customers never feel it. We achieve this through a multi-layered strategy, using idempotent receipts to prevent duplicates. Every payment gets an idempotent receipt so it cannot be duplicated, travels over independent paths and confirms exactly once, even in the end of the operational day. We use a zero-trust posture. Every server proves its identity. Access is strictly limited. Each customer's data has its own keys, and data stays in the correct region. We measure reliability the way finance teams feel it. Could I send the payment? Did I get the confirmation? Can I export the statement? We drill like firefighters. Kill a provider, fail a region, delay callbacks, until recovery times work in practice, not just on slides. Our AI watches latency and error patterns, proposes reroutes before queues build up, and drafts clear incident notes for human approval. That mix of redundancy, discipline, and rehearsal is what earns trust with regulators and with our clients.
Users typically don't want to see compliance, but they still expect trust, transparency, and security. A clunky onboarding process or heavy-handed verification can break customer confidence. From a product design perspective, how do you translate complex compliance workflows into seamless, customer-friendly journeys so that safety and trust are invisible yet deeply embedded?
People come to get started, not to wrestle with forms. So we let the system do the heavy lifting. We pre-fill corporate records, verify accounts through secure connections, and guide the user through a short sequence of steps with a visible progress bar tied to risk. No mystery hoops, no repeated uploads. If a document will not pass, the app says why and how to fix it. A human handoff is one click away for edge cases. After onboarding, each customer sees a simple compliance profile, current limits, the date of the last review, and exactly what would unlock more capacity. Our AI Copilot helps operations teams by suggesting the next best document to request, spotting mistakes in uploads, and drafting plain language explanation. But it never approves on its own. Sensitive actions still require two-person control, and everything is locked.
How can product teams take evolving regulatory requirements and productize them, turning obligations into opportunities that strengthen customer value and competitive positioning?
I have to say that we ship the guardrails as useful features. Before a payment leaves, pre-flight checks simulate the decision, so Treasury knows in advance if it will pass and can plan cash flow with confidence. Operational resilience rules become a practical dashboard. Recovery targets, fail-over posture, the date of our last drill, and one-click evidence exports for the customer's auditors. For crypto adjacent flows, we show which counterparty institution receives what data and why, so there are no surprises around the travel rule. We also offer jurisdiction packs for Switzerland, the UK, the EU, and several other jurisdictions. So, data location, reports, and templates are correct from day one. While other great platforms like Finastra, Thought Machine, 10x, Toom, or Saskada focus on cloud-native architecture and product flexibility, our core focus has always been on being a compliance-native engine for regulated businesses. Event-sourced evidence by default, own rule builders, and rules flow editor that the product can read, region-aware data from the start, required tech and compliance documentation for regulators, and AI that is governed, which means explainable, approved, versioned, and reversible.
And our last question. Payments, lending, and wealth tech are innovation-heavy areas but also tightly regulated. Teams often face tough calls, launch quickly with risk, or slow it down to comply fully. How do you evaluate trade-offs when building new features in such areas? And beyond risk mitigation, do you see compliance itself as a potential driver of innovation, for example, by enabling new, trusted products that wouldn't exist otherwise?
Usually, we use two gates. First one, local by design. If a feature cannot be made compliant, we redesign it or do not ship. And the second one, risk versus value. We size the residual risk, assign an owner, set a kill switch, and agree what success looks like. New ideas start in shadow mode, where they score real traffic without impact. If the results hold, we roll out behind feature flags by corridor, customer tier, and data region. Our AI agents run under an agent security layer. Tools are whitelisted, sensitive steps need two people, every decision carries an explanation, and all actions are written to the audit log. This discipline speeds us up in practice because we can explain every decision and prove our controls. Regulated fintechs and banks can raise limits sooner, offer instant payments with confidence, and expand to new regions without surprises. That is how we turn compliance from a cost into a genuine advantage.